question. How do you see, and especially probably for both of you who come from a financial services fintech background, how do you see financial services and fintech contributing to the digital transformation of the Caribbean region?
Well, finance is really part of the information industry. It's all about how do you connect, borrowers and savers. So that's about information. How do you find them? How do you connect them? And so finance has always been heavily connected with tech, and there's been lots of disruptive technologies in finance. That's going to continue. Digital transformation is going to have a huge impact on the financial sector. Should make a lot of things easier, quicker, faster, hopefully cheaper, although that's not always been the case in the past. I think in particular, the area we'll see most transformation is in the payment system, is in getting payments between retailers, consumers across country. Clearly with the correspondent banking challenge in this region, if we can use tech to help us deal with that, that's going to be very important. So it's going to have a major impact. Ultimately though, of course, finance is also about lending. And we need to make sure that is regulated to make sure that our financial system doesn't go bust and we don't have a lot of systemic risk everywhere. And so the role of technology in that may be different. It may be about more information. But I don't think we're going to see a changed environment where there are no things that we don't recognize as banks who are lending based on rules of credit quality, etc.
Okay. Gabriel?
So the question was, how do you see regulation playing a role in digital transformation within our region?
No, financial services and fintech.
And fintech. Well, financial services and fintech are areas that tend to touch the field of highly regulated industries. And as such, the regulators are really the main gatekeepers behind that innovation. So I find it interesting when the good professor mentions the need for avoiding systemic risk. Absolutely correct. But the main issue comes down to the fact that regulators need to readjust how they regulate in this new order. And what I mean by that is understanding that not providing the correct frameworks or facilities for the advancement of society in and of itself is a systemic risk to the society. And they need to start factoring in the damage that can be done by not being active with regulation, as opposed to acting in a position of avoiding risk. They need to understand that they're creating risk in some instances. And that can hurt the advancement of financial technology. That can hurt the advancement of innovation in society. So what really happens is, and it's important that we do avoid risk at all costs, or where necessary. So what happens is the regulation is setting a floor of where people can't fall below because it provides that netting. But it's also setting a roof of where innovation can't go above. And that has a dramatic cost. So I believe that regulation will play a massive role if taken on the right way. So credit to yourself for the regulatory sandbox. And one of them, I think, in my opinion, a masterstroke move was trying to replicate that sandbox in other jurisdictions in our region and then creating a tunnel between them. And that's the right type of thinking, because if I get approved in one regulatory sandbox as an innovator, I automatically am subject to be approved in the second one. So
we've sort of jumped into financial regulation, which I don't know if that was your intention, but if I were to respond as a regulator, I think it's very important that regulators focus on why we regulate. And actually there are two reasons why we regulate: consumer protection and systemic risk. And we believe that we in Barbados can be a place of innovation if we hold to those two things. Sometimes you hear regulators say, oh, I'm also there to protect the reputation of the jurisdiction, protect integrity. When you start getting vague and overarching, you give yourself, you arm yourself the ability to say no very easily. So we try to narrow down, is consumer protection at risk? Is systemic risk an issue? And if those things aren't a problem, we're happy to allow businesses to operate. Now, we also believe that people can take risks. We're not against people taking risks. The issue is who should take risks in your society.
Yeah.
So we don't believe your great aunt with their life savings should be putting it all on the risk of something that she or he may not understand. And so we say, look, if people are of a certain amount of wealth, if they can afford to lose their shirt, we welcome them to take risks. They are the vanguard of risk takers. Great Aunt Agatha is not the vanguard of risk takers. So in the Barbados regime, if Gabriel comes to us with a new idea, we'll say, Gabriel, first, if you can limit it to certain types of people who we don't worry if they lose their shirt, we will regulate that tomorrow. We will happy to accept that tomorrow. But if you're doing a public offer to anyone, people who are quite vulnerable consumers, who may not fully understand what they're doing, who were they to lose, and the whole nature of markets is if some people are winning and some people are losing, and if they lost, they would lose their shirt and would be in a very difficult situation, then we want to not say no, but we want to regulate that carefully.
Understood.
Well, my take on that is that there's a retail market out there. While Auntie Betty might be someone that we're trying to protect, we're also limiting the ability for the average consumer, the coconut cutter on the street, for example, to become an investor. And we're restricting the ability for them to get involved in sophisticated products and not moving up the scalability chain in terms of economic value because they're unable to make these investments because a regulator has set limits and barriers to entry. And if we look at something like cryptocurrencies, there's no need for a regulator's involvement in that. Sorry. And what I mean by that is
it's lost half its value in 1 year.
And it's also gained 1,000x in 2 years.
Exactly. Do I want Aunt Agatha's life savings to be doing that over the course of 12 months? No. I'm fine for your life savings to be, but not for Aunt Agatha's.
Right.
So you go ahead and invest it, but we've got to protect certain people. So they can invest in the stock market. There are many things that Aunt Agatha can invest in.
And we can provide limitations and securities around the barriers of where they can go upwards, but to remove the entry barriers, to place entry barriers, I think is a massive hindrance in society. I believe that if you were to go down the road of offering securities, I believe that the average person on the street should have the ability to buy $1 worth of a security. And the problem is right now, it's the issues. One of the bigger issues on unlocking finance and capital in the Caribbean is giving people access to investment products, good investment products. And something like financial innovation can bring those good investment products around. But even more importantly than that, we can start looking about how collateral can be moved around the Caribbean and how securities can be moved around the Caribbean. But even more importantly than that, we can allow entrepreneurs to start sharing their risky projects with the average populace. And the populace gets to take the decision on maybe a limited investment quota, but nonetheless still have exposure to go and buy into John's taxi stand that's looking to expand across the region. And these kind of opportunities. And
we're supporting that. There's a spectrum of investment products. Most people in a bank are earning today 0.2%. You could earn maybe 1,000% on a risky product. Tons of space in between. Crowd financing, where we get the crowd to invest in Uncle John's coconut stand, we are encouraging that. And the rates of returns one can obtain on those things, maybe 10, 12, 15%. There's a whole spectrum of things. What we're saying is that we want the public to be involved in things and be exposed to as many things as possible, but we want to limit who could be in a very serious problem. Not eliminate, not say no, but limit who can be exposed to something at the riskiest end. And that's the way we promote innovation. That's where we get these new products in, and people can then prove. You can prove to us, we've done this thing, we've done it for 1,000 qualified people, no risks at all. You were overly scared about this. And then we would say, open it up.
Question. Do you think that there is or should be a difference between a finance company that is investing in technology or a tech company that is focusing on financial services?
Absolutely. Two fundamentally different things. One's a VC company, a venture capitalist firm that wants to invest in technology, and their activities are completely different. And the other is an organization that, through the use of software frameworks, is able to bring around a new financial paradigm that is worthy of investment by the VCs. So the two are completely and fundamentally different. In my opinion, maybe I understood the question wrong.
So where we think about things is not what they're called. It's what is the activity.
Right.
So if something's called a tech company, but it's actually doing investing, then we view it as a financial company. If it's a financial company, it's actually just doing tech. It's just doing payments. It's not taking risk. We actually approve those very quickly on the basis that actually they're not taking financial risk. There's no real capital required behind that. And so we focus on the activity. What is the activity?
So the fundamental of that kind of mindset is there's a new generation of offerings hitting the internet, and some of us have heard of them. And usually they are, to the professor's point, massive risk and scams. But there's some of them that are legitimate. They're called initial coin offerings. And there's software companies actively in Barbados and across the region, spread well across the region, that have raised hundreds of millions of dollars to build these protocols. Now, the interesting part about that is these protocols cannot be regulated. While you may want to deem this software company, they've released a bundle of code and lines of mathematics that serve a particular intention on the internet, there's absence of contract. There's, if everyone in that organization were to be wiped off by a bus, the network is still alive. It exists on the internet, and it doesn't exist on one computer. It exists on thousands, if not millions, spread across the world. And these systems use blockchain technology on the back end. Remember, the only thing that makes blockchain cool is the fact that it's an immutable ledger. No one can destroy it. They can't edit the records. They can't forge them. And because of that main security aspect, you're eliminating a lot of trust. You're eliminating a lot of jobs as well, the jobs of regulators, the jobs of central banks, the jobs of accountants, in some cases.
But Gabriel, I saw a figure, tell me if it's wrong, that 80% of these ICOs have failed.
Sure, and 90% of startups fail.
Right, so that's why we don't allow, ICOs to be on a public offer to everybody. But we will allow an ICO on a limited basis to those people, qualified investors, who we don't mind if they lose their share.
And I think that's where we differ, is because you say
yes,
allow, you say allow where you assume you can enforce, and a regulator is only as good as their enforcement. And the issue with an ICO is, once again, there's absence of contract, there's absence of organization, there's absence of centralized entity. There's no one person, there's anonymous groups building out these protocols on the internet that then support a certain function. Whether that function is a medical record system that gives the end user absolute control of their data, but the entire record-based system is controlled by no central party, that can be released as an ICO in theory. And the issue with that is a regulator from a particular jurisdiction can't come and tell somebody they can't invest in that. Furthermore than that, there's on-ramping systems, whether it's using your credit card or cash with over-the-counter or even Bitcoin. To enforce that right now, it's stand outside and scream at the clouds, and you get the same.
I used to think that. And in fact, I went on the radio once making that very point about 20 years ago, that finance had moved to cyberspace, that we couldn't regulate finance. And then I became a director of a bank. And I became personally liable for making sure that I knew where the money came from all of the customers of the bank. And then I began adopting I collect some lost causes, and one of them was a financial transaction tax. The UK has a financial transaction tax. The UK is one of the world's biggest stock exchanges, international market, and so lots of people trading the stock market in the UK from all over the world online, and they all pay the financial transaction tax. Now, why do they do that? So an American using a French bank going through Hong Kong to buy a UK share pays the UK regulator's tax. Why? Because the contract is not legally enforceable unless they do so. Unless it's stamped, it's not legally enforceable. No one wants to own an asset where they cannot legally enforce it. So regulators have power. Money is not anonymous. We track money. That's why we have correspondent banking problems. We track money very closely, and the regulators must make sure they're not in the way of innovation. We try to be very supportive of it. The business model follows the regulatory model. We've got to get the regulatory model right and the right balance, but do not believe that regulators do not have power and influence. Money is a regulated activity.
Right, and on that notion, it just perfectly plays into the exact point that I was making, is that I believe our regulators need to change their mindset and move away from the centralized models of how things are managed. And I think it's critical more now than ever that that single statement is paid attention to by our regulators, because the idea of working in a bank is subject to the centralization of the traditional business market. But the way we're going and the way technology is moving is towards decentralization of activities, of involvements of all facets of the financial activity. And the goal of a regulator at that point is...
I agree with you completely, you know.
But the goal of a regulator at that point is to not try to work with innovation once it comes out. It's rather try to ensure that there's an opening path for innovation ahead of it coming up, because you can't tell where innovation is going to come from. It can come from anywhere.
Understood.
But instead, it's to ensure that you don't step ahead of it before it even exists.
Which is why we should not be technology platform driven. We should encourage any innovation anywhere. And our issue should not be what is the technology. Our issue should be, is the system at risk? And most of the time, the system is not at risk. So we tick that box. Are there vulnerable consumers at risk? If you come and tell us that there are no vulnerable consumers at risk, we say yes, we want innovation. But I come back to that point, that you have to decide not yes or no to innovation. You have to decide if you really want to be innovative. If you decide yes or no to innovation, you're going to end up pushing back innovation. What you have to say is, who do you want to be innovative? And that's your pathway to innovation. If you say, I will accept any innovation there is, I just want to determine who is going to be the vanguard and exposed to that, which is what we do. We say we will accept anything if you start off with a set of people who we don't care if they lose their money. And if you prove to us, having done that, that this is safe, we broaden it out.
So I have two questions for you. I'm a software developer in Barbados. I design an ICO, and let's just say it. It's a protocol that takes chats and encrypts them and gives the user their end user chat data, like a Facebook that you control your own data, or instant messenger. I release this protocol on the internet, and a bunch of Bajans or Barbadians go and buy into this protocol because it now has a limited value or a limited existence. In other words, there's only 100 million tokens, and every time you use this chat, it's going to cost you 5 cents of a token. Users start to love this chat system. It picks up value because of utility, and that token rises. A bunch of Barbadians buy it. A good competitor comes out, and my token system crashes. I, as a Barbadian, have built, released, and designed this system, and have released this code to the internet, which then got picked up by exchanges, digital asset exchanges, regulated ones around the world, and end users started buying into it. A bunch of Barbadians now lost their shirts because of it, and they went and bought it under the table. Am I going to be prosecuted under your...
Of course not. You're selling software.
I didn't get your permission.
But let me explain. Because if you are selling some software to the world, you're not selling a financial product where someone buying the thing that you are selling exposes them to substantial risk.
But that is an ICO, Professor.
No. We are only concerned. We will approve anything as long as what we're concerned with is there a public offer of an instrument where the buyer of that instrument can have significant loss. Okay. And that's when we start to regulate it.
So in this new world, there's initial...
But selling a book which might talk about dangerous things is not regulated. Selling a piece of software or code that other people have to use. So who is selling the instrument? We regulate who is selling the instrument and the activity.
The Barbadian software company that released it
is not selling the financial instrument.
They would have held a portion of the tokens as part of their service, as income.
If they're selling it as a financial instrument to the public, then yes, that's regulated. And wouldn't we want anyone selling financial instruments to be regulated?
Absolutely.
Question, and just looking at the screen, one of them, just going back
because we haven't got off your first question, have we?
That's all right. And I love where the discussion is going. Going just back to the focus on cryptocurrencies and looking at the second question, given the anonymous nature of cryptocurrency, how can regulators or legislators protect the system from nefarious activity that undermine a system?
May I? So the first thing is cryptocurrencies are not anonymous. They're pseudonymous. You can easily work out the identity of it. The second thing behind it is one of the most nefarious activity happens over the paper-based, cash-based system, as a matter of fact. You wouldn't be wise to use blockchain technology for nefarious activity. And I say that because you're literally storing your illegal activity on the world's most perfect paper trail system. And applied mathematics in the form of chain analytics, chain analysis, and there's 1,000 companies out there that have built their entire business model around tracking, tracing, maneuvering, and monitoring suspicious activity, illicit activity, and nefarious activity on these chain systems to turn around and go to data processing units and regulators and agencies and companies like our own, Bit.com in Barbados, to focus on providing them this kind of data so that they can make informed decisions about their transactions. So I would say that it is a regulator's best friend to want someone to try to attempt to do illicit activity on these types of networks.
I agree with that. I mean, this notion that money is anonymous is misguided. And blockchain actually gives us a pathway to see the path, and indeed such a clearer pathway that it may be a way that we can actually improve our controls on anti-money laundering, etc., on correspondent banking concerns. So we as regulators are not technology platform driven.
Okay. Good to know. So just a couple more things, because we need to begin to wrap up shortly. And going back now to the whole focus of digital transformation and financial services, fintech, and how those could contribute to digital transformation in the region. Based on the CDB's paper that I think is published today, one of the things that they spoke about is digital literacy. And I'm also concerned about just inclusion, because it's all well and good sometimes when we're talking about Camille, who has a business and seems to be exposed to technology, but what about a lot of the people who are at the base of the pyramid? How could financial services, fintech, help in facilitating and driving digital transformation?
Professor, may I?
Yes, please.
So I want to start off by thanking the CDB for not just hosting this event, but actually launching the Caribbean Settlement Network on April 25th, I believe. And the reason why that's important as a side topic to what we're talking about here is the Caribbean Settlement Network, was designed with a notion of building out a legal and regulatory framework that all of the Caribbean islands can look at and follow, which will then set a standard and uniform way that we can come together to start exploring things along the lines of intercentral bank settlement, direct currency swaps, multilateral clearing facilities, and a list of other financial activities and events that have a trickle-down effect to that end user. That end user on their smartphone can now send Barbados digital dollars to a St. Lucian real time. If the right policies are in use, within seconds of two governors making an economic agreement, that economic agreement can be represented in code and enacted to that end user in real time. So let's just look at the example of a direct currency swap between two central banks, let's say the Eastern Caribbean and Barbados as an example. The possibility of being able to transfer Barbadian to Eastern Caribbean dollars can be as simple as the system being live and a contract being represented as a smart contract within code. And the implications of being able to see that type of system live and active, it's dramatically going to change the way that we do financial services in the Caribbean. It's going to change the way that we receive payments, send payments, remit payments.
Right.
And it's not just going to do it for this region, it's going to have implications globally, as we've already seen with central bank digital currencies, which, by the way, the Caribbean was the first to lead the charge on. The Eastern Caribbean Central Bank with Dr. Timothy Antoine as an example. So we have situations right now where the underlying financial inclusion and ability for the small guy to be banked with advanced financial services, it's well on its way because of some regulators in our region who have started looking the right way.
So I think I want to approach that in two different ways. I think the first thing to say is that we need to digitize our economies. There's no question about that. They're going to be huge benefits from that. But we have more fundamental problems than that.
Exactly.
The technology revolution has accelerated dramatically since the 1970s. Imagine, some of you are too young to do that, but imagine we were back in the 1970s. I mean, this was before the miniaturization of silicon chips, before miniaturization of computers, before the internet, before the Internet of Things and all this stuff. Economic growth was faster than it is today. Economic growth from the post-war to the 1970s was faster than it's been since. So these things are very important, but we've got some fundamental problems we have to change, for which digitization is one of the solutions, can help us. A classic one in the Caribbean is that we are a region which actually is not short of savings. We have a lot of savings. We have about $40 billion of savings around the region. In Barbados, we have around $10 billion of savings. Our challenge is mobilizing domestic savings for investment. And we have missing markets in our financial sector. We have banks that are collateralized lenders. They're basically only want to lend for mortgages and cars. And they don't want to lend for anything else. So we've got all these savings, earning 0.1%, not doing stuff. Missing markets. We've got to create new financial instruments in which we can get people lending and investing. It doesn't have to be extremely risky, 1,000% type returns. It can be, we've got a crowd financing company in Barbados that's entered the niche of around 12% returns. Crowdfunding for young startup businesses. We need to fill these missing markets, and I believe digitization will help a lot. Many of these products are essentially digital. They don't have branches. They're about information online. Much of this can be done online. And the final thing I'd like to say is that, I mean, I probably pushed you in our earlier conversation to talk a bit about finance, but a lot of digitization is not about finance. Exactly. In Barbados, we wish to digitize our government, digital government. We want every single process to be done 24/7 online. We believe that will make a dramatic impact on the way people access government services. And that will speed it up. One of the things I like to say is that every one day you waste in a government office waiting on a driving license or whatever, it's 0.25% of GDP growth. And most of our people are spending not one day, but 4, 5, 6 days. So let's eliminate that. We will get some growth. But let's not think that that is an end in itself, because we have deep structural problems, inequality problems. You know, real wages have not risen for the majority of people living in advanced economies since 1980, despite the technology revolution. So we've got a lot of things to do besides technology in changing our society.
So in wrapping up, I would have to say that I fundamentally disagree with the professor on that note. I think technology is the cornerstone right now to our success and would be the greatest thing to grow efficiency across the board. I mean, have you ever stood in the line for a driver's license or a passport or a national ID? Or when was the last time you had to use a government service? How was that experience? How many hours did you spend waiting in that line instead of being useful to your economy? And I mean, this is across the board, from our airport systems to our banking services. You can't go anywhere without it being physical, in person, and inefficient.
Yes.
And that's just on one aspect of it. You're not even talking about the background side of data movement and activities amongst government, or governance itself, the amount of inefficiency in the governance of a country, the activity of managing resources. You talk about, you don't think that's that is the fundamental priority, and that is the problem that we're not facing right now, that we're not taking seriously. This is a cancer, it's prevalent. You know, we just talked about, I just returned from Dubai. You want to see amazing? Go to Singapore, go to Dubai, where you need a new SIM card from Virgin, they show up at your doorstep. You want a bank account? They're showing up at your doorstep. You need a doctor? He's at your doorstep. You want gas in your car? A mobile truck is pulling up from an app and filling up your car, wherever it is. I mean, every last part of the society is efficient. And it starts to make you wonder, why are we not doing it back there? And you step into that and you realize, well, it's because we're not taking it seriously. And we don't realize that it's the most critical thing we can do. It's the most critical thing we can do right now in our societies to unlock the problems that we have today. It is a cancer. That mindset is a cancer. And we need to abolish it. We need to turn to every last facet of our society and attack it with technology, because technology brings around efficiency because it eliminates human error. Human error is bad, okay? It's really bad, and it causes problems. and the truth is, right now, you know, we also talk about the cornerstone right now that we need to solve is collaborating as a region, which we don't do. We have Grenada and Barbados and Bermuda and Jamaica. Jamaica's national ID system just failed. Trying to do national ID. Guys, can you come together and use the various service providers, brainstorm, spend 6 months and build a regional national ID system where every time I go to a bank, I don't have to re-verify myself, AML, KYC.
We need to do these things, but let's get real.
But that one
things.
facet unlocks everything,
Yeah,
and then you move from there.
But you know what? If we don't change the level of skills in our country, if we don't change the level of public health in our country, if we don't change income inequality in our country, those things we will still not grow.
And if we don't implement technology, those things will be prevalent and they will continue to grow even worse.
Gabriel, there are matters of faith and there are matters of empirical study.
There's matters of fact and there's matters of opinion.
There are matters of fact and there are matters of faith. And the fact has been, we have done technology in many places, and it is not alone, that does not alone transform our economy. We have much to do. One necessary thing, but much else to do.
But what transforms it, Professor, if I may just end it with 4 key words: transparency, accountability, and integrity. And that's what technology brings.
Totally agree.
Those 3 things. Without technology, you cannot hold people accountable because there's no chain of custody, there's no records, there's no provability, then there's no integrity because there's no transparency. The systems collapse and fail time and time again. I'll end there.
Thank you very much.
Okay, ladies and gentlemen. I think we should give the panelists and Michelle a wonderful round of applause.